Good morning. This is Axel Merk, President Chief Investment Officer of Merk Investments. Happy Monday. We do have a risk-off feel to the market. S&P futures are down minus 45. The Dow is down minus 550. The bonds are, the 10 years up 10 ticks. The 30-year is up a full point and 4 ticks. Gold is down 21 now at 1709.45. That's about 1.2%. That's off the lows. And the euro just popped a tad higher at 112.80 as I speak, up about 20 basis points. Strongest currency is the Swiss franc, up 42 basis points. Earlier, the Swiss franc was the only G10 currency that was up. Weakest currency is the loonie, the Canadian dollar, down 26 basis points, and also weak the Swedish crown, down 25 basis points. Earlier, the Australian dollar was the weakest. The 3-month T-bill rate is at 16 basis points. 3-month LIBOR is at 32 basis points, and the effective Fed funds rate is at 7 basis points. I think it was as high as 8 basis points earlier today. Around the globe, stocks are down. Euro Stoxx 50 is down 1.5%, and that's thereabouts so many other European markets. The Nikkei, which obviously closed earlier, was down 3.5%. Hang Seng Index 2.2%, and the Chinese Index 1.2%. S&P futures were worse, yes, late last night, and global bonds are stronger. Pretty much around the globe. And so this is a risk-off environment. Crude, let me just mention that as well. West Texas is down 3.5% at 34, just 35 now, 1.3%. And Brent is at 37.75, down 2.5%. Stories about the second wave, stories about a correction being overdue and whatnot. Europe is opening up with some minor exceptions. Travel within the EU is mostly possible. In New Zealand, the first rugby game was held with 20,000 people in the audience. New Zealand has had 0 cases as the borders pretty much shut, and so they have decided that they don't need any social distancing anymore. In the US, obviously, politics are running high on what to do and where. If I just look at my little, it's not a crystal ball, my rearview mirror, I suppose, on what's happening where. The overall, the data in the US have been kind of flattish in recent weeks if one takes away the noise. And if one looks at the state-by-state data, there's obviously difference in different states. They're the ones, the worst affected states are not the reproduction rate that's New Jersey, New York, around 0.8. And then on the high end of the spectrum, Arizona, Arkansas, Montana are kind of the ones that are the highest. If I take a state like California, that is just around at 1, so things are stable. They're not quote unquote improving, but they are stable. And about a good dozen states has an R reproductive factor of over 1 based on the latest statistics. That said, some of these states, Idaho, Oregon, Montana, Arkansas in particular, appear to have rather inaccurate data. And then on the kind of good news states, the states that say that their data aren't all that accurate are Hawaii, Vermont, Nevada, and West Virginia, Wyoming as well, North Dakota as well. And the other ones suggest that they have a higher confidence interval on the data. So what does that all mean? Really, it means that life is going on, I suppose, in some ways. Usually what seems to make sense is that if people think there's an outbreak, then they'll be more cautious. And obviously in some states, people are less inclined to listen to the authorities to begin with. Now, around the world, in China, they've had some isolated outbreaks that have made it into the media, and including, I believe, one in Beijing. And so the Chinese authorities obviously can clamp down much more forcefully than we can here. And so who knows how that's going to play out. The question is, how does that all translate to the markets? And we've had a market that's gone up in a gangbuster way, and now it's come back down a little bit. We do have a lot of cheap money available, and so that might support the markets. Lots of dip buying and so forth. We do have the New York manufacturing index out, the Empire State Index, and there isn't much manufacturing happening in New York, but it's one of the indicators that comes earlier than some others in the cycle, and that was blew away expectations. So that was very good. It came out at minus zero point 0.2. Expectation was minus 29.6. Previous indicator was minus 48.5, with the zero level being all equal. Now, obviously, PPP, I think, is one of the key things that's been keeping a lot of these things afloat. And so a lot of that is, well, what sort of stimulus is going to come down the pipeline, and how are we going to transition back to work? Will the jobs be there as the economy opens up again? And just anecdotally, I was in a restaurant on Friday, first time in months, and so I asked, of course, how is business compared to normal times or pre-COVID times, and business is about half, and so the tables on the street and whatnot, and so business is half, which also means that they also had about half the staff that they normally have, and so there were half the people that still don't have a job, and the question is how they're going to get these folks to come back. And so your guess is as good as mine on that. We will publish this week a research report that's on the equity market, where I can show you charts. In this forum, it's very difficult for me to show you charts, not technologically, but from a regulatory point of view, because I have these in a live setting, and all the charts I would have to get pre-approved. I couldn't have these daily briefings if I had to have everything pre-approved that I show you. And so that's why you just hear me chat for most of the time. Sometimes I can use one of these pre-approved chart books to give you a flavor, but you can get them on our website at merkinvestments.com/research. And so with that, I'll keep it at that for now. Have a safe week, have a great week, and I'll be in touch, and take care of you guys.